Okay, I want to qualify first what I'm going to say. That this is not financial advice. Don't put any of your money, don't spend any money that you can't afford to lose. What I'm going to tell you now is not financial advice, so I don't want you going out and putting money on what I'm going to say. But I'm going to try to give you a synopsis of what's happening in the situation, why we had this little, I'm going to call it a steep correction in the markets, like a correction, not really a crash, but a crash is coming. And I'm going to tell you what I think is going to happen in the next little bit. And this is important because this is going to be the thing. What caused all this? What we just experienced is that the Fed came along, and in October, November, and December, the first 3 months, they were trimming their toxic balance sheet by $10 billion a month. January, which is the month we're in right now, of 2018, February, and in March, they're going to be at $20 billion a month. And so they've went through almost 1 month of $20 billion. They just increased it in the first of the new year. They went through 1 month. Actually, they went through 1 month and about, 6 days or something. 1 month and 6 days of $20 billion. That's all it took to bring about what we saw now. So, guess what? At the end of March, they're going to increase it, instead of $20 billion, they're going to increase it to $30 billion. Exponentially increasing the effect. But not only that, there's more, folks. They are going to quite literally raise interest rates again in March, around 20th of March, I believe. Now, the reason why they're going to do all this is because the economy is going to be booming. The stock market's not going to be collapsing. You've seen your stock market collapse. You've seen it. And yesterday and last night, I was forecasting it. Either today or tomorrow would be the end of it. I thought it would be tomorrow, Wednesday, but okay, it's a day early. It's ending. The stock market crash is starting to end. Tomorrow is going to be a rally day. Now, guess what? Over the course, I believe, of the next 6 weeks, we're going to see new highs in the stock market. This is what I think. And not only that, but I think, now this is going to be the shocker, I think we're going to see a new high in Bitcoin. Or we're going to see a very substantially higher price in Bitcoin. So guess what this means? Well, you can guess it. This is why I'm telling you it's not financial advice, because I don't want you guys running out and putting your house, the money in your house all on Bitcoin. You know, because I'm not going to do that. And that wouldn't be sensible. You know, just because I think that this is what's going to happen. So don't listen to me. Because what if I'm wrong? You lose everything, you know? I mean, I could be wrong about this. So, here's the thing. If I can get scrap a little bit extra money ahead together, I think I'm going to buy cryptocurrency right now. Because now's the time to buy it right now, in my estimation. Now, that's just me, just what I got to think about it. So I think we're going to make new highs in the next 6 weeks of the stock market and in cryptocurrency. While at the same time, we're probably going to see gold and silver languish, and the dollar's probably going to start to languish again. Dollar's probably going to drift all the way down to, like, what is it right now, 89 point something? I can see it going down to 87 or 86 in the next little while during this thing. Because nobody's going to want those three things, gold, silver, and dollars. Is going to be unloved again. Now that the stock market's starting to go back up, now cryptocurrency is going to start. They're all going to get back into this mania again. Meanwhile, what is going to go unnoticed is the 10-year bond is going to start to creep back up again. And while all of them are in this mania, buying stocks and everything else, I think the 10-year bond is going to creep back up again over the next few weeks. And it's going to creep back up, and it's going to crack 3%, and nobody is going to pay too much attention to it cracking 3%. And it's going to get up like 3.05, 3.1, 3.15. It's going to start to get up in that territory, and then all of a sudden, we're going to get this crash that we just had, but it's going to be the big one. It's not going to be like this one we just had. It's going to be double what we just had. Double it. And it's not going to end after 2 or 3 days and have a rally. It's just going to keep diving. It's going to keep diving until... Now, on this one we just had, fear was just starting to enter in last night. Last night, I was watching it. The fear was just starting to enter in, and they showed their hand. That's exactly what I said. The dollar started to go up. Gold and silver started to go up, both. They showed their hand last night when it was about 500 or 600 point drop today in the futures market. Last night, they showed their hand because they were just starting to get frightened. Just starting to get frightened. Next time, they're not going to just get started getting frightened. Next time, they're going to pee themselves. And so what do you think is going to happen? Gold, silver, and the dollar, just like I said, are going to shoot to the moon. And you saw what happened to cryptocurrencies at the exact same time last night when the stock market dropped 500 points. Cryptocurrency was going down the toilet, just like I said. The whole thing is already earmarked. It's already showed you which way they're going to go with this next time when this comes back. This is coming back, and this is going to come back with a vengeance in about 6 weeks from now. And the Fed's going to induce it at the end of March. On March 20th, the Fed's going to come out and they're going to raise the 25 basis points because the stock market's going to be doing so good over the next few weeks. It's going to make up all of these losses and more. So the Fed's not going to have any reason not to come out and go ahead and raise interest rates on the 20th of March. And that's what they're going to do, 25 basis points. And then at the end of March, everything's still going to be looking good. It's all still going to be a go signal, and they're going to increase to $30 billion a month, their toxic balance book sales. They're getting rid of the bonds. So that's going to increase the pace of the bonds. And that's going to be the straw that broke the camel's back. So you know when this crash is going to come. Sometime in April. March is going to pass. The stock market's going to be at all-time highs. This is what I think. And sometime in April, a crash is going to start. And there's going to be no stopping it next time. It's going to be the big one. Prepare yourself accordingly. You can look back at this video I just made right now if I'm right. And you can say, hey, he's the guy that nailed it. You know? And my whole line of reasoning revolves around what the Fed's doing. My whole line of reasoning revolves around the fact that they're going to raise interest rates on about the 20th of March and that they're going to increase their sales of their toxic balance book an extra $10 billion at the end of March over the $20 billion that's already caused this trouble. So the $20 billion's already caused this trouble is when they increased from 10 at the end of December, the start of the new year, they increased from 10 to 20. And we didn't get very far with that 20 before, boom, this hit, right? How far are we going to get when they increase it to 30? And the next crash is going to be exponentially worse because the 10-year rate is going to be over 3% then. So it's all very logical. What I'm talking about is all very logical. It's not like I'm some sort of a magician to figure this out. It's just that I've used logical deduction to see what the Fed's doing and see what the cause and effect is going to be of what they're doing. It's just pure, it's like what Sherlock Holmes used to do, you know, when he used to analyze things. And I've explained to you what my analysis is and why I think this is going to happen. You know? And the reason why I'm talking right now, why I knew that we were going to have a market recovery today and tomorrow was that I saw the sell-off in the Treasury, the buying into the Treasury, the sell-off in the stock market, the buying into the Treasury, took the pressure off that caused this crash in the first place. So once you take the pressure off, it's just a simple logical deduction that the market's going to start to go back up again. Once you take the pressure off that caused it to fall. So the whole thing is just logical when you really think about it. So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next article. Bye.